Welcome to Wealthfinity's channel on Mastering Inflation Numbers today, where we explore the latest trends and insights on inflation and its impact on wealth management. Inflation is a critical economic indicator that can affect our purchasing power, savings, and investments. It is crucial to stay informed and updated on the latest developments in the inflation landscape to make informed financial decisions. At Wealthfinity, we are committed to providing you with valuable insights, practical strategies, and expert opinions from leading financial professionals. Join us as we delve deep into the world of inflation and equip ourselves with the knowledge and tools needed to navigate these uncertain times. Inflation numbers today. What they mean for investors. Inflation is a term used to describe the rate at which prices of goods and services increase over time. It's a crucial economic indicator that can affect various aspects of an economy, including interest rates, job creation, and investment opportunities. Therefore, it's important for investors to keep a close eye on inflation numbers and understand how they can impact their portfolios. Recently, inflation has been making headlines due to its significant increase in many countries around the world, including the United States. In fact, the Consumer Price Index, CPI, which measures the average change in prices of goods and services over time, rose by 6.2% in October 2021, the highest increase in over 30 years. This surge in inflation has led many investors to wonder what it means for their investments. Inflation numbers today. How they affect your wallet. Inflation is a topic that often makes headlines, but many people don't fully understand what it is and how it affects their wallets. Inflation is the rate at which the general price level of goods and services in an economy is increasing over time. When inflation rises, the purchasing power of money decreases, which means that the same amount of money can buy fewer goods and services than before. The Bureau of Labor Statistics, BLS, tracks inflation in the United States and releases monthly reports on the Consumer Price Index, CPI, which measures changes in the prices of goods and services that consumers buy. The CPI is a widely used measure of inflation and is often cited in news reports and economic analyses. So, how does inflation affect your wallet? Here are some ways. Prices go up. When inflation rises, the prices of goods and services increase, which means that you have to pay more for the same things. This can be especially problematic if your income doesn't increase at the same rate as inflation. Your savings lose value. If you have money saved in a bank account or in other low-risk investments, inflation can erode the value of your savings over time. For example, if the inflation rate is 2% per year, your savings would need to earn at least 2% interest annually just to keep up with inflation. If your savings earn less than 2%, you're actually losing purchasing power. Interest rates may rise. When inflation rises, the Federal Reserve may raise interest rates to try to slow down the economy and keep prices from rising too quickly. Higher interest rates can be good for savers, as they may earn higher returns on their investments. However, higher interest rates can also make it more expensive to borrow money, which can be a problem if you're in the market for a loan. Your salary may not keep up with inflation. If your salary doesn't increase at the same rate as inflation, your purchasing power will decrease. This can make it harder to make ends meet, especially if you're already living on a tight budget. Here are some additional details on how inflation affects your wallet. Cost of living increases. When prices of goods and services rise due to inflation, it becomes more expensive to maintain the same standard of living. For example, if the price of gasoline goes up, it becomes more expensive to commute to work, which can increase your overall cost of living. Fixed income earners may struggle. People who rely on fixed incomes, such as retirees, may struggle to keep up with inflation. Social Security benefits, for example, are adjusted annually based on the CPI, but the increase may not be enough to cover the rising cost of living. Businesses may pass on costs to consumers. When businesses face higher costs due to inflation, they may pass on those costs to consumers by raising prices. This can create a cycle of inflation, as higher prices lead to even higher inflation. Impact on debt. Inflation can have a significant impact on debt. If you have a fixed-rate loan, inflation can make the interest rate you're paying lower in real terms, as the value of the dollar decreases. However, if you have a variable-rate loan, your interest rate may increase as inflation rises. Impact on investments. Inflation can also impact your investments. If you're invested in fixed-income securities, such as bonds, inflation can erode the value of your investments over time. On the other hand, Some investments, such as commodities, may perform well during periods of inflation. It's important to keep in mind that inflation is a natural part of the economic cycle, and some level of inflation is necessary for a healthy economy. However, if inflation is too high, it can have negative consequences for individuals and businesses alike. To protect yourself from the effects of inflation, it's important to stay informed about inflation trends and adjust your financial strategy accordingly. This may involve investing in assets that tend to perform well during periods of inflation, such as stocks and real estate, or considering inflation-protected securities. It's also important to maintain a diversified portfolio to help mitigate the impact of inflation on your investments. In conclusion, the Mastering Inflation Numbers Today video provides valuable insights into the complexities of inflation, its causes, and its impact on the economy. The video emphasizes the importance of understanding inflation and its effects on individuals, businesses, and governments, and offers practical strategies for managing and mitigating its effects. The video also highlights the role of central banks in controlling inflation and maintaining economic stability. Overall, this video serves as an informative and engaging resource for anyone seeking to deepen their understanding of inflation and its implications for the economy.